Boom! What's up, Investomaniacs? Your boy, a Night Rider here, and today we've got your Robinhood stock market update of the day. Up first, we've got a little tidbit on Venmo, owned by PayPal. Venmo just whipped out some official etiquette guidelines for their users. 76% of your Venmo pals prefer initiating a $14 for tacos Venmo payment over receiving a brutal Venmo request. So don't send one, maybe? But you really need that $14, don't you? And payback within 24 hours is now ideal turnaround time. McDonald's burgers market share rises for first time in 5 years. 40 million more fresh beef quarter pounder burgers were pumped out by McDonald's this last quarter compared to just a year before. Mickey D's revealed that sales of Big Mac's new anti-frozen cousin is up 30% since it introduced the option in 2018. And for the first time in 5 years, McDonald's gained market share in the obscurely delicious informal burger category. Ronald deserves a master's degree in smiles and supply chain management. The creation of a fresh beef option was a major investment by the McDonald's team. It took nearly 4 years to install a new process to go from cow to mouth faster and never frozen. Here's what the massive transformation included: designing new fridges to handle fresh beef at the right temperature, distributing new kitchen utensils, aka spatulas, to every participating franchise about to flip the softer, never frozen burgers, training 3,000 restaurant operators to prepare the actual patties. The takeaway: this is why you invest in your business's growth. Just as Mickey D's is spending on its supply chain to accommodate the new patties, it's pursuing another major overhaul: the $6 billion nationwide renovation of the majority of its 14,000 U.S. stores by 2020. Fresh beef is a case study of how investing big into your infrastructure can cook up major payoffs. The biggest U.S. casino was just created, and Carl Icahn orchestrated the whole thing. 1 + 1 = 5. That's how Carl Icahn described the merger of Eldorado Resorts and Caesars Entertainment, announced Monday. Teaming up creates the largest U.S. casino operator with 60 gambling spots across 16 states. Technically, Eldorado is buying Caesars, but they will share ownership 51%, 49%. Here's the receipt. The price: Eldorado's paying $8.5 billion in cash and some stock to acquire 100% of Caesars shares. The debt: Caesars carries some baggage, $8.8 billion of debt. That now belongs to Eldorado. The total cost? The law of addition gets us to $17.3 billion Eldorado is throwing on the table for all of Caesar's chips. Carl Icahn made this happen. Here's how. His hedge fund, Icahn Enterprises, bought up 9.8% of Caesar's shares. Then he went public with it and announced that the company should sell itself. Caesars directors immediately gave Carl 3 seats on the board and let him choose the next CEO. Carl's ownership rose to nearly 16%, and he wielded his power to push for the highest bid from Eldorado. Carl's shares will now be bought for $13.01. That is a 51% return in just 4 months since he snagged the board seats. The takeaway? This is American-style investor activism. Carl Icahn helped create that term in 1985 when he famously took control of TWA Airlines, turned himself a nice profit, and then left. And TWA ended up going bankrupt 3 times. Here's that activist playbook. Number 1, buy a big chunk of a company's shares. Number 2, publicly demand change, often by insulting management's competence. And number 3, hope to sell after changes have boosted the stock. As Carl likes to put it, quote, a lot of people die fighting tyranny. The least I can do is vote against it. Up next is the Viagra for women, Valisi, which sounds to me an awful lot like Khaleesi. They got FDA approval, and then the stock drops. Guys with sex problems generate billions of profits. Not so much for women. AMAG is trying to change that with Valisi, which just earned FDA approval to treat premenopausal hypoactive sexual desire disorder, which sometimes I refer to as that time of the month. That affects 5.8 million American women, yet only one other type of therapy is available on the market. But here's how it's different from Viagra. Viagra treats arousal problems. When you want to have sex, you just can't get it up. Valisi treats a bit of a meta-arousal problems. It's when you want to have sex. The second problem is harder to cure. This isn't a pill. Valisi requires an injection on the thigh or abdomen 45 minutes before sex, and it actually affects the brain, unlike Viagra, which affects only one thing, as women would say. Valisi's branding, though, looks strategically more like a new direct-to-consumer soap startup, brushed with hints of millennial pink. The takeaway? The news didn't go down as planned. Two key stocks are involved in this story: Palatin Technologies, which developed the drug, and AMAG, the just out of Boston company licensed and marketed the product. Their stocks were up as high as 39% and 12% after the news, until an article came out where a science reporter panned the drug for its brutal injection method and unpleasant side effects. Wall Street is concerned. Until next time, may the market be ever in your favor.